Welcome back to NVDA Radar Talks. NVIDIA's latest quarterly financial performance was undoubtedly impressive, but the next thing that should affect its stock price is its announced 10-to-1 stock split plan. So why is NVIDIA splitting its stock? If a business performs well over the long term, that performance is reflected in the company's rising stock price, putting the high-priced shares out of reach for some potential investors. To correct this inequity, management can embark on a stock split to reduce the share price. NVIDIA noted in its announcement that the move was intended to make stock ownership more accessible to employees and investors. As a result, everyday investors can afford to buy whole shares rather than the fractional shares offered by some brokerage firms. Once the stock split takes place, shareholders will receive 9 additional shares of NVIDIA stock for every share they already own. While there will be 10 times as many shares, they will trade at 1/10 of the price, so fundamentally nothing will change. The same things that drove NVIDIA's stock price to its current level will still be in play going forward. Although a stock split does not essentially change a company's valuation, some people believe that the stock price will fall. If the stock split forces the stock price to fall, many investors may take this opportunity to sell their shares, causing the stock price to fall sharply. Is this really the case? NVIDIA's trading volume and turnover rate in the last 2 trading days are higher than usual. It is really scary to trade at such a high level, and the cumulative decline in the last 2 trading days is more than 4%. However, what we need to think about is how likely it is that big capital will exit the market now. Let's take a look at the 10-minute chart of the stock. We saw some selling in the morning and late trading of the stock on May 30th. There was also a large amount of stock selling on May 31st, which led to a drop in the stock price, but the stock price returned to the opening price of May 28th at the end of the trading day. In addition, we saw a large number of chips being traded at the last moment of May 31st. Is this a big capital entering or exiting the market? So what will happen to the stock next? The stock had a cumulative net inflow of $2.7 billion on May 24th and 28th. The stock had a cumulative net outflow of $3.5 billion in the last 3 trading days. Yes, according to the data, the stock had a larger net outflow of capital in the last 4 trading days, but this was in exchange for a total drop of 4% in the stock price, which does not look like it has officially entered a downward trend. NVIDIA stock split is scheduled to take place after the close of trading on Friday, June 7th. I think the stock price will not fall before the plan takes place, but will rise slightly. However, I would not invest in the stock now because I think its upside is limited. I set its resistance at $1,184.50. That's it. This is my analysis. If you have different ideas, please leave a comment below. Thank you for watching. If you like my video, please give a thumbs up and click the subscribe button. See you in the next video.